Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to look at the results of the AbbVie Pharmaceuticals for the fourth quarter of fiscal year 2023, which were not bad, not good, you can say almost flat to negative growth. But despite that, we didn't really see any major reaction on the downside, nor the stock dived after the announcement, nor it is showing the signs of decline after 2 weeks have passed since the earnings report were released. So this is a curious case of a company in which there has not been growth, there has not been a major revision on the upside for the current fiscal year. But still, if you look at the stock price trajectory for last couple of months at the minimum, you will see that it has been upward and it is still that way, and that has some reasons, and that reasons are what we are trying to understand and understand the implications of that as well. First thing first, we will consider its earnings report, which was released on the 2nd of February 2024. And for the last quarter of the fiscal year 2023, the stock did decently well. Its EPS was lower by massive 59% if you look at it on a gap basis. But if you look at it from different perspective, adjusted diluted EPS, then it was lower by 19 percentage points. So depending on how you calculate, this is different, but on both the count, it is still negative. And for the full year, the revenue was at US dollar 54.3 billion, which is also lower by more than 6 percentage point on reported basis, and little less than 6 percentage point on the operational basis. There are key portfolio divisions for the company, and you always have this information available with you, from which you can calculate the segment wise performance of the stock as well. You can see how these portfolios like immunology are doing and whether there is growth segment wise or not. The oncology, the immunology, and neuroscience portfolio contribute significantly for the company's total revenues, and there is also one more portfolio of aesthetics. The company has also embarked on acquisition, and it is expecting to complete the acquisition by mid 2024, and that acquisition also going to contribute to the revenues and net profit. So for the ongoing fiscal year, that is fiscal year 2024, the company is expecting to arrest its decline in the revenue, which was there for the fiscal year 2023, and through the fiscal year 2029, that is for next 5 years, it is expecting a compounded single digit growth. And when you say single digit growth, it can be anywhere in the range of 1 to 9, but nonetheless, it is quite confident of continuing to grow for next 4 to 5 years. And there are also reasons to believe that it can happen because its product portfolio is strong, and after the acquisition of these companies, the immunogen and cerebral therapeutics, its presence in oncology and neuroscience is going to get stronger, as these are going to be highly complementary assets. Now let's dive into the details of the fourth quarter earnings. For the quarter ended December 31st, we can have these product wise revenues also. These are key product. Of course, there are also some minor offerings which haven't been classified individually. As I said earlier, the key segments are immunology, oncology, aesthetics, neuroscience, and then there comes eye care and other key products. For the revenue, the immunology is the single biggest contributor, followed by neuroscience. The company has a presence across the world. Its key market remain the developed world, USA in particular, but also the international segment contributes quite well in the revenue. For the fiscal year 2023, the contribution from the international market were showing growth with the revenues at US dollar 12.4 billion, which is little less than one third of its revenues from the US. So you can make a informed view on how much the US market is important for the company in comparison to the rest of the world. This is the consolidated statement of earning, and for the last quarter in comparison to the fourth quarter of 2022, there was a decline in the revenue. But if we look at the net earnings, the net earnings declined significantly and just a little over 800 million from US dollar 2.4 billion a year back. And for this, the key reasons are the increase in operational cost, whereas the revenues haven't really grown. So that has resulted in these slim operating margin because the cost of product sold had risen significantly, taking away 1.5 US dollar, 1.5 billion US dollars. Let us see how the company managed its cash generated from the operations. And for that, we will have to consider its cash flow statements. And here we don't really have the cash flow statement. I think I will have to download the full report. It is a publicly available document. You can always access it if you want to go into the details of the report. I'm just going to take you through the key highlights of AbbVie's earnings. Alright, here it comes. Financial releases, SEC filings. Here we have it. Coming to the report, we are going to now look at how the cash was generated and how the company spent it in the fourth quarter to get a good idea of the company's financial health. And here we don't really have the cash flow statement provided by the company, so we won't really be able to go into the details of the cash utilization, and that is going to be a major hindrance to getting to know the company's performance in the recent past. I think it must be included in the SEC filings, so we will have to now consider SEC filings. All we want to do is take a look on the cash flow statement for the I think we don't really have the cash flow statement, so this is all we have. And now we will have to rely on the investors' reaction to the earnings report, and from that we can infer that the major institutional investors haven't really found anything which might have dampened the sentiments. So on that count, at least there is a positivity, because if you consider the stock price trajectory of the AbbVie in the recent weeks, here you can see that for last month and a half, it has been simply consolidating with the upward bias. It hasn't really grown much, nor it has declined much. It has been holding on to the gains it had experienced by the end of January. After the earnings report was released, there was upward momentum, and since then it has gained around 10 percentage point, but this growth has been quite slow and steady as well. Now that it is sitting with around 5 percentage point growth from those prior levels, I feel that the major investors are quite optimistic about the company's prospects for the coming quarters. So we can also take the similar view, and as long as there is no significant decline below its recent swing low, the prior consolidation flow low, we can hold on to this positive outlook and continue to look for the buying opportunities. So buy on dips can be a good strategy to work with in the average case, and I think that is also advisable on the short term basis. But for the long term, of course, we will have to enlarge the view and gather its stock price performance over a larger time frame. For that, we will have to expand the candlestick periods time frame to at least a day. And here, if you consider the stock price performance since the November, you can see that it has gained around 40 percentage point, and even on these elevated levels it is not really showing the signs of any bearish formation. It is simply climbing in a slow and steady manner, so that gives hope that it is likely to continue to do well in the coming weeks as well. And as I said, in the case of short term outlook, we have to keep an eye on the recent swing lows. Same thing applies for the longer term formation as well. Now, for the medium term, the prior price formations high is going to be crucial. So, somewhere around here, the 160 range is going to be a crucial marker for the medium term of the average, and as long as it holds above that level and continues to consolidate within these price formation, I am going to remain bullish on the stock from the medium term perspective. So till that level holds, we can go with the buy on dips approach, and if there is any significant correction followed by due consolidation, we can keep an eye and go for a long trade, go for a buy trade as soon as it stabilizes and starts to show the signs of moving on the higher side again. So this is going to be a case of a patient wait and watch, because at the current price formation there is not much of an risk reward ratio which is going to be favorable to us. The stock is at the elevated level, and its recent swing low is also quite a distance away. That means the risk is on the higher side, whereas the returns of these stocks continuous upward momentum are going to be rather limited and also rather slow. So because of that, I would recommend that you wait for some correction from the current levels, or if it continues to inch higher and higher, you should wait for some significant correction of around at least 5 to 10 percentage point and consolidation afterwards. And I am quite sure that the opportunities like that are going to arise in coming weeks or coming months. We can't really be sure about the time, but the possibility is there. Now, if we are looking for longer term investment, that is for more than 6 months to a year at the minimum, we have to consider its trajectory over last couple of years. And for the stock, the company has been doing well since the pandemic, and it has almost tripled in the valuation. Not exactly tripled, but it has almost tripled from that pandemic low of around 70 to now sitting at 160. And even on these current levels, the price formation is quite strong. It is still strongly bullish, and as I said, it is simply riding a high on the expected earnings growth, expected revenue growth, and also the recent acquisitions are going to help the company expand its presence in related domains, related segments, which is also going to be a revenue booster for the AbbVie. So, taking together all these factors, I would advise a patient approach. Maybe in a short term horizon, you can get a few opportunities in coming sessions but the view is going to be strictly for the short term duration. But if you are looking for opportunities from medium term to longer term perspective, then I feel that we will need to wait much longer, because on these both counts the stock is sitting at its recent high, and we can't really get involved till there is consolidation, and then after due consolidation the signs of revival on the higher side, and afterwards we can get involved and try to ride the stock higher. But till that happens, it is safer for us to simply sit on the sidelines and watch how the stock price evolves over the next few weeks to next few months, and then take informed view and go for the opportunities as and when it arises. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback, and I would be more than happy to take the discussion forward. If you have found the session informative and useful for your trading decisions, do like and subscribe, and you will have equally informative sessions available to you every day. Thank you all for joining in. See you next time around. Till then, goodbye.